perfection doesn't exist for anybody. You can have a lot of mistakes and there's still tremendous margin for success to come out the other side.
Yeah.
And I think that's what we're going to hopefully uncover for you today, Rachel, as we go through this, is that, yes, there's a big step back with this big life change, but how do we make you fulfill those 3 big goals that we kind of uncovered,
Right.
but also you came out the other side feeling much better
Yes.
and with purpose.
45 years old.
That's right.
$362,000 net worth. You make about
That's better than I thought.
$120,000 a year.
Yes.
Sounds like you were in a fantastic spot. And it's been just a super easy journey from just straight from where you were to where you are now,
Yeah,
right?
no problems
That's
at
the
all.
way it went.
Yep. The good news is I don't want to be a millionaire. So you guys, this may be a quick, easy, check the box, we're done.
We're out of here. Why don't you want to be a millionaire? Was being a millionaire a bad thing?
I don't know, maybe.
Oh, maybe being
I don't know.
a millionaire is a
I
bad
guess it
thing.
depends on how you use your money.
Depends on what $1 million means for you,
Yes,
right?
exactly. Yeah. For me, I don't think I need $1 million to be happy. I know I don't because I'm happy now and I don't have $1 million. I'm a public defender, kind of lifelong public defender. I love my work. I have 2 great kids.
And how old are the kids again?
They are 5 and 6, but 6.5.
The
Very
halves
important.
are so
They
important
are so
at this
important. I do not
stage.
want to insult my daughter. My ex-husband and I got a divorce last year, so about almost exactly a year ago. So my financial situation changed markedly. You know, it basically is kind of cutting your income in half, but all your bills stay the same. So I've just been trying to reconfigure this past year and kind of figure out how to manage what I have now, and what needs to go and what needs to stay. And I have had some, I guess, I want to think about how to do this year a little bit differently to prioritize some things that are important to me.
What was life pre this huge life change?
Right.
And then what has changed, specifically around the financial stuff?
Sure.
Because I think you used the term reconfigure and rebuild.
Yep.
I want to dive into what was it like and then what is it like now?
Sure.
But what are some of these goals you have? Because you said, hey, I don't need $1 million to be happy.
Right.
And we would agree with that sentiment that we recognize money is nothing more than a tool that allows us to accomplish the things we want to accomplish. It's just a means to an end. It's not the end itself.
Yes.
So for some people, that's $1 million. Some people, it's much less. Some people, it's much more.
Sure.
And so we
Sure.
are in alignment on
No,
that.
I appreciate that. And that's why I've been drawn to your ideology, because I think that resonates with me.
Well, it's also, our big thing is own your time.
Yep.
And to own your time, do you want to retire at some point?
Yes. I
We
sure
have
do.
we have to have an army of dollars somewhere.
Yes.
Y'all were in steps 8 and 9. Am I getting this right?
yeah.
I think so, yeah.
We've come a
Yeah, we were
ways back. So still this thing had a
Yes.
cost to it.
Oh, yeah, for sure. Yeah, I think, it's just going to sound real spoiled, so I'm just going to say it. We just didn't really think about money. We just had it.
Okay.
And so there was a level of just doing what we wanted. We had everything we needed and everything we wanted. I guess that's why I always question why people need more money, because I felt like we didn't have a ton of money, but we had plenty,
Well,
so it was just different.
I think that's really interesting because I think a lot of people go through that. They're in a season or stage where maybe income is good, maybe expenses are low, maybe health is good, relationships, whatever that thing
Right.
is, and then something happens.
Sure.
In your case, it was a divorce. Sometimes it's sickness. Sometimes it's job loss or a
Sure.
move or a change. And then all of a sudden it changes. And
Yes.
there's like a mindset shift that happens. Hey,
100%.
I started with this view of what it was going to look like, and then
Totally.
something changed.
Completely.
And
That's
so-
exactly what it was like.
I want to dive into that. When it comes to finances, what are your goals? What do you want money to do for you?
So I think one thing I really liked about having money is when we saw something in our community that we thought would benefit from the money that we had, we just gave that thing money.
I mean, like philanthropy? And
Yes,
that sort of-
exactly.
Love
Like
that.
if there's something in our community that needs help that aligns with our values, we just give them money, and it just wasn't really a question. Obviously we had conversations about it, but it wasn't like a question about if we had it. And I think in this past year, when I was kind of figuring out budgets, one of the things that changed is like my ability to assist in that way. And I love my community. I can tell people in Franklin are very proud of their community. I feel like that about my community, Waterloo, Iowa. And I want to be useful in that way. And I feel like in the past year, I have not done that in a way that I'm happy with.
Is being able to do more from a philanthropic standpoint. You mean, okay, what I want to do is I want to revisit my budget and I want to figure out how I can cut expenses as much as possible so I can give as much as possible, or is I want to figure out how I can build a level of wealth so that one day I can write checks freely the way that I used to write checks freely. And neither of those are right or wrong. I just want to understand what the goal is.
Right. Well, and I don't know that they're mutually exclusive either.
Fair point.
I mean,
Yep.
I think, it would be great to do both, but I think my immediate concern is helping now.
How do I help now?
Yes, exactly. And there are some institutions that I'm concerned will not remain if people don't step up to help now.
Well, let me ask you some questions then, because
Sure.
a lot of times I'll ask people, hey, what are your goals? And they'll say this one thing, which
Right.
I love, and that's obviously the top priority. So I'm going to ask you about some other things, right? Do you want to retire one day?
I sure do.
So I'd call that a goal, right? Like I say, one financial
Fair
goal
enough.
would be working towards financial independence. For your kids, age 5 and 6, do you have a desire or hope for one day them to go off to like higher education and college and that sort of thing?
Yes, I
Is your
sure
intent
do.
that you would like to be able to assist with that? Or
Yes.
is that okay, so we got
Yes.
all right, we're at more goals. This is an exercise we encourage everyone to do, right?
Yeah.
Money is nothing more than a tool that allows us to achieve our goals, but we have to realistically list out our goals.
Right.
And in the pursuit of our goals, sometimes the pursuit of one goal will impact our ability to pursue another. And so we kind of list all of our goals out and then we prioritize them. As we think about how we deploy our capital, we want to deploy it in the most efficient way to satisfy all the goals, not funding one goal today at the expense of another goal tomorrow if we can avoid that.
When do you want to retire?
I had kids late in life, so I feel like I'm in a weird spot because, I'm middle-aged, but I have very young kids. My goal was to retire about the same time my son goes to college.
Okay. So
But
is
I
that,
don't know.
is
So
that
I would be like 60.
Or is that
Yeah.
60?
I'd be
Okay.
60.
Okay, so that's an intersection point because
Yes.
we all have these inevitable dates that will happen. So retirement at 60, education. How much you said they're 5 and 6?
Yes.
So we have 13,
Yeah,
12
around
and
12
13
and 13.
years.
Yes.
These are two things that will need to be taken into account.
Pre-divorce, what was life like? You said, hey, we didn't really think about money a ton. Were you diligent savers?
Oh,
Were
yeah.
you saving for the future?
Yes.
Like maxing out retirement accounts,
Yep.
doing that kind of stuff?
Doing all those things.
Even, I've seen, if I remember correctly, maybe even like prepaying a mortgage.
Oh, yes.
Early on.
Yeah.
So I would argue you were kind of in like the step 8, 9 phase of the financial order of operations,
That's
right?
right.
Like when we think about it, you kind of made it past all sort of the base level steps and you were there. Now this large life event has happened. Where are you now? Like if you had to assess, where would you say that you are in the financial order of operations?
Yeah, I've been thinking about that a lot. I would think I'm probably more at like 4 or 5.
4 or 5.
Yeah.
Got it.
I
Is
think
that
I'm
where,
back there.
when you went through the divorce, did you just fall back from 8 to 4, or did you have to go all the way back to 1?
Oh, so that's a great question. Yeah, I kind of went back to 1. I kept the house, but obviously I bought my ex-husband out of the house because I had saved so much for retirement. We had different levels of retirement, so I had to give him a chunk of money to even that out. So really, he got all the cash, and I had the house. So yes, I was kind of starting from 1. Like I needed to make sure I had enough for deductibles. I think I had like $2,000 liquid cash. I mean, it was like bare minimum.
So often when people think about the financial order of operations, they think about it as a straight line. I go from step 1 to step 2 to step 3 to step 4, and I just kind of track up this
Right.
mountain. And perhaps that even was your journey
Sure.
initially.
Yeah.
But then inevitably something happens, and in real life, when we see the way that food practically plays out, it looks a lot different.
Yeah.
Like I'm in step 9 for a bit, but then I went all the way back to step 1.
Yeah.
And then now I'm slowly building back. And so we thought it'd be interesting. We think about, okay, well, if we look at where you are now, your food journey kind of looked like this,
Right.
right?
Yeah.
Right.
Step,
Totally.
step 9,
Exactly.
down to step 1, but now we are beginning to build. Now
Yes.
we're building back. We've got deductibles covered.
Yep.
We're going to talk in a moment about your match, which is a little bit different because of your vocation.
Sure.
You're rebuilding your emergency fund. So you are squarely in step 4. So we're tracking back up the mountain. I just want to pause and say that's okay.
Oh, yeah.
A lot of people, they get discouraged and frustrated.
Sure.
But this is what happens in life. And you were like a
Completely.
living testament to that happening and being okay.
Totally.
There's a path out of that.
Perfection doesn't exist for anybody.
Yes.
This whole book is full of mistakes, and that's what I think is so great is that you can have a lot of mistakes and there's still tremendous margin for success to come out the other side. And
Yeah.
I think that's what we're going to hopefully uncover for you today, Rachel, as we go through this, is that yes, there's a big step back with this big life change. but how do we make you and fulfill those three big goals that we kind of uncovered,
Right.
but also you came out the other side feeling much better and with purpose.
Yes, no, totally. And I'm very proud, honestly, of the work that we've all done this year. And I'm very proud of my kids. You know, it's a change in how things have gone. And I think we've done a great job. But so yes, I do not feel shame about having gone back. But of course, I want to keep moving forward.
Love that. We've already mentioned, even with this large life event, your net worth is at like $362,000. So when we look at your net worth statement, it looks pretty good. I mean, you said, okay, you've got about $22,000 in cash. You said that's about 4 months of living expenses. Our goal is to get to 6. In investments, you have about $232,000 broken up between a 403B, a 457, and a 401A, which is just all through the same employer that you're working with. You have your primary home, which is worth about $349,000. So on the asset side of the ledger, things look fantastic.
Yes.
That's great. On the debt side, looks like you have 2 debts. You have your primary mortgage, $179,000 at 2.375.
Yeah,
Wow.
good rate.
Is that a 15-year mortgage?
I wish it were. No.
What type of mortgage is it?
It's a 30-year fix.
Now, when you,
It's even better though.
Yeah,
No,
I know, I
when
know.
I asked, typically when I see rates that low, I always think it's a 15-year because typically 15 years are about 0.5% cheaper than 30 years. So for you to have a 30-year at 2, did y'all prepay it? I mean, did y'all buy some points or something? That's a low rate.
No, we just got it at the exact right time.
Wow.
And honestly, we talked about doing a 15-year. That was 1.8.
Holy cow! You must have. We watch the market pretty
I
closely.
know, it was like
Y'all might
perfect
think-
timing.
I mean, when we go
Yeah.
and try to choose the bottom of markets, I think y'all must have just
we
stuck the
hit
landing
it,
perfectly.
Exactly. Yeah, we really did. We
That's
lucked
an
out.
incredible rate.
and so, but you said y'all were prepaying. Y'all were like paying the mortgage off quickly.
Yeah,
What?
we were trying.
Okay.
And I know you guys are going to be like, that was not a good idea, Rachel. You should have been putting more money in savings.
Well, we're not about good ideas or bad ideas. We're about optimal ideas and suboptimal ideas.
I love that phraseology.
Do you still have a desire to pay off that mortgage?
Yes, and I have been doing it. I know. And so that's my question. That's my big question.
No, wait a minute. I see a high yield savings account there on cash. What are you getting paid on that right now?
3.8. I know.
3.8.
I know.
We have
All
a
right.
delta there of like a percent and a half. And by the way, this isn't even because there's moments where you're probably making 5% on that cash too, right?
Yeah. Yes.
Yeah.
I feel like I have anxiety related to debt. Like I just want to get out of it as soon as humanly possible. And so I'm overpaying, but I understand my margins would be larger if I weren't, and I may be able to meet my goals a little
When
better.
you were trying to do charitable work, was it for the banks or was it for these organizations that you're
For
doing
these
it?
organizations.
Okay. I just want to make sure we're clarifying here, because there is a
Fair
spread
question.
here.
Thank you.
We're going to put a pin in the mortgage for a second because
Okay.
you just said something. I want to get out of debts as quickly as possible. Your mortgage is
Yes.
not your only debt. You do
Right.
have this other debt. There's a $60,000 loan from Sister.
Yes.
What's
Yeah,
that? Walk
give
us
us a
through what
scoop.
that is.
Yeah, so that was part of the settlement piece in terms of, you could do the qualified domestic relations
Yeah,
order.
the quadros.
Right.
That's right. Very good. We elected not to do that. I did not want to fight about a quadro.
Okay.
I just kind of wanted to wrap things up. And so that was our decision that I would just do a straight cash payment to my ex-husband rather than do a quadro.
From your retirement account.
Yes. My sister, God bless, she's a lawyer who makes money. She
I've never heard it said that way. That's hilarious.
Yeah, it's a
good
public
one.
defender. You
That's
have
a
to
good one.
delineate, right? So she was very generous and loaned me $70,000 so I could make that payment to my ex-husband. And
So
so
you've already paid $10,000 in the first year,
yeah,
right?
and she was she would let me take as much time as I wanted. Again, just anxiety about I don't like that being there.
Are you paying that monthly? Are you paying it yearly, or just when
Monthly.
you have money coming in?
No, we have I set up through my account that she just gets $1,000 every month on the same
great.
date.
Does she prioritize you going through the financial order of operations, or do we need to lean heavily into making sure your sister is paid back faster?
Yeah, no, she's so kind. I mean, so again, you guys are not going to like this. We originally had an agreement where I would pay her $700 a month, and then once I figured out okay, here's where my margins are, I felt like I could pay more, and so I wanted to. So we changed the agreement.
Okay.
And did a new amortization schedule. So the goal, as it's set right now, I would pay her off in spring of 2031.
But we can treat this as low interest debt. There's not some
Yes.
asterisk next to it that there's a time certain
No,
for
no.
just
And she's
relationship purposes.
sweet, and this is not money that she I'm guessing she doesn't even really think about it at all, you know?
Okay.
Yeah.
But it's more like I think about it.
We're going to get her in next month for
Yeah.
making a
But
million.
it is an interesting thing. Again, just kind of thinking through where your goals are. Like you would agree that 3% is low interest,
Yes.
right? And you would even concede that on your high yield savings you're making 3.8.
Yes.
So there's an arbitrage there. Not that we want to take advantage of the sister or anything, but there's an arbitrage.
No.
But you did say, hey, one of my goals is like philanthropy today,
Yeah.
present day.
Right.
And we haven't talked about retirement savings or any of that kind of stuff, but just in my mind, well, there was $700 and it could have stayed $700. That would have freed up $300 a month for philanthropic purposes,
Yep.
right?
Totally.
I just want to understand the mindset. You said I have one goal, and my number one goal is to be philanthropic, and I'll be philanthropic today
Right.
to the extent that I can. But when faced with the opportunity to do that
That's
or get out of
fascinating, Bo.
debt,
Yep.
you said, hey, I'm going to get out of debt more quickly.
Yeah.
So I
that's
just want
such a good point. There is some cognitive dissonance there, isn't
Okay.
there?
Okay.
Yeah.
So it was likely more subconscious and unintentional than an intentional decision,
100%.
right? Okay.
Yes. It was an anxiety ruled decision.
Got it.
Y'all keep using these SAT words, and I'm going to. I mean, we're going to have to go have a discussion here in a minute. Good at math. If you saw my SATs, not so good with some of the SAT words.
So now let's talk about your savings, the way that you build and the way that now you said you're a public defender. So
Yes.
the way that your retirement is structured and set up is a little bit different. Can you tell us a little bit about that? It's not like you just have a 401k like some people might be familiar with.
Sure. So we have a system called IPERS, the Iowa Pension System. I'm sure it has other words in it that I don't recall right now. But basically, a part of my paycheck comes out every month. I think it's approximately $300, maybe $290, and then the state pays maybe like $430 or something each month, and then that's just set aside. So when I retire, there will be like a pension amount that I will receive monthly until I die.
Is it based off of the money that you put into the system, or is there a different formula that determines what your pension amount is?
It depends on when you retire. So the amount is markedly different. I could retire at 55 under our system, but I think I would get like $3,000 a month or something.
So one of the things that we try to determine is, okay, your pension is based on your highest 5 earning years, and then there's a multiple factor based on how long you've worked there, like what your age is, how many years you've put in. And so we said, okay, well, let's kind of estimate, what this looks like. And you said right now your income is about $120,000 a year. And we said, okay, what if we just assume 3.5% wage growth, like just, fairly conservative inflation-adjusted wage increases.
Right.
By the time that you get to 65, we're going to use 65 as our base level assumption here. Your projected monthly benefit at age 65, if we assume that 3.25%, I'm sorry, I said 3.5, we use 3.25, annual wage growth, about $10,254.
That'd be pretty good.
That sounds pretty good, right?
It's a future value, though.
It is a future value. So when we think about that, $10,254 at that point will not feel the way that $10,000 feels today.
Sure, of course.
So that would be the equivalent at age 65 of about $5,700 today. What's your burn rate? Like, do you know what you spend on a monthly basis to do the things you want to do the way you want to do them?
I try to spend no more than $5,000 total. So I would be totally fine there.
So if we have $5,700 coming in, that's great. One of the issues, though, with the IPER system is that there are no cost of living adjustments on that. So once your pension starts, it's kind of locked
You're
in
stuck
at that
with it.
number.
Right.
So we don't just want to think about year 65. We want to think about age 70, 75, so on. And so we just want to kind of model for you, as you go through time, the purchasing value of your pension goes down. As you can see, it starts at $5,700 a month in today's terms, but as we go through time, the purchasing power of those dollars becomes lower and lower and lower. Well, likely your lifestyle will either stay the same, or when you retire, hopefully it would actually increase a touch. So we have these two things moving in different directions.
Sure.
A lot of times we have people ask us this question: hey, if I have this big pension and I'm able to get the average 5, why would I save anything else? Why would I continue to build? This is why, right?
Makes sense.
So I think we agree your pension is going to solve a huge chunk of your need in financial independence, but it's probably not going to solve all the need.
Sure.
Is that a fair statement?
Well, and also there's an underlying risk that's sitting out there that if we went through, and I don't know that we will, because typically high inflationary strikes, I've lived through 2 now, because the late 70s, early 80s, and then during the pandemic period that we had this huge run up of inflation, you're running some risk. As long as inflation went back to normal or below average, your pension's actually going to be great.
Yes.
But
right.
we do run a risk that if we have any extended periods of higher inflation, it does minimize the value of this future promise.
Sure.
Because that's really what you're you're trading in some of your earning potential
Yes.
so that you can get this promise from the government. And the promise, depending upon what the purchasing power of dollars is in a mini decade in the
Yes.
future, it is a big question mark.
Sure.
So that's one of those things. As a financial planners, we're always like, well, we have to try to figure out what's the counterbalance, because this is a blessing, but how do we add something so that we don't have to put all of our eggs in one
that
basket?
basket,
And that's
sure.
where we're going to talk to you about trying to, once again, using the financial order of operations, how do we build something in the background to kind of, be a flex system on what's going on with the pension plan?
And it doesn't seem like this is news to you, because if you look at your savings priority again, you are currently contributing to some of the defined contribution
Sure.
account.
Yes.
You are putting money into your 457. There's
Yep.
money going into your 401a. So you can see that all in, if we just kind of remove the pension from the equation, you are saving and investing, or have a total amount being invested on your behalf of about $3,000 a month. So if we just take the amounts that you have in your retirement accounts now, plus that level of savings, when you look at the portfolio path, we go from $232,000 today, and this is assuming a very conservative 6% rate of return. When you get to 65, just that level of contribution is going to get you to like $884,000.
Okay.
Now, again, 884 in the future won't
It's
be
gonna
worth the
mean
same
something
today.
different,
So
sure.
if we bring it back in today's dollars, that would create annual retirement income for you of about $20,000 a year.
Oh, wow.
Right? So if we just, take 20,000 divided by 12, it's about $1,600 or so a month. But
Sure.
now in retirement, we're starting to stack. So we
Yeah.
have our pension coming in, and then we have some portfolio resources we can use. All right, well, now at age 65, if we think about today's dollars, just based on what you're currently doing, you're on track to have like $7,300 a month.
Okay.
And the beautiful thing is, with your portfolio assets, those do keep up with inflation. So
Sure.
it will retain purchasing power, but we still have a little shortfall as we get into the later years. We get into the 80s and 90s, we're falling below that like critical 5,000, assuming that's like about what you
Yes,
spend.
sure.
So we do still have a little bit of a shortfall we have to make up for.
Yeah.
But in true Billy Mays fashion, but wait,
There's more.
there's more. There's more. Because one of the things that a lot of people, and it's, I don't want to say controversial, but some people are more certain of it and some people are less certain of it. But as of right now, Social Security is part
Right.
of what's available to a number of Americans when they retire.
Sure.
And so I said, okay, well, if we think about how much your Social Security that you've paid in, plus what we estimate if you continue to work, your Social Security would generate at age 65 about $2,800 a month
Okay.
for you. Now, we like to be very conservative with Social Security
Sure,
because some of the
'cause we just
unknowns.
don't know,
So we
yeah.
said, hey, what if we assume that it only grows at about 1.5% per year? It is going to lose some purchasing power in retirement, but still likely going to be there. Well, what you can see is that at age 65, you actually have a $10,000
Yeah. Okay.
living income coming in
Oh, that's really good.
that does decrease through time.
Sure.
It does seem to create that opportunity at that stage of life. You'll likely be able, if your living expenses are $5,000, that leaves a lot of room for using those resources and those dollars for other things.
Yeah. Right. Good point.
Philanthropy and giving and that
Sure.
sort of thing. So it seems that with what you're doing right now, you are on a pretty healthy track, assuming an age 65 retirement.
Sure.
How does that make you feel?
I don't think a lot about retirement. I feel like I've felt some comfort just because of the situation I'm in, but it is nice to see how it stacks up. This would be a time when my kids would be in college, presumably. Like I could maybe be more assistive there and then be a lot more assistive in my community.
One of the things I think is important to note, though, is all of this is predicated upon age 65.
Yes, right.
So one of the things that we would encourage you to think about as you move forward, because I don't think a lot about retirement. Whether you think about it or not, barring something else happening, it's likely going to happen. You know what I mean? You're
Right.
going to make it to age 65, probabilistically wise, right? If you were to begin making decisions around like, hey, I think I want to exit the workforce at 60. Well, now all of a sudden, my highest 5 years of earnings are likely lower.
Sure.
The multiple I get on my pension is likely lower.
Sure.
I've had less time to save up and build assets, so that's lower. And I've also paid less into the Social Security system, so I'm likely to have a lower Social Security.
Sure.
So every year that we move earlier has a cost associated with it.
Yeah.
The longer we wait to begin thinking about that, the more difficult it is to overcome that cost.
I think this year my anxiety has been related to like, I just didn't know what life was going to look like. You know, I really had to reconfigure that. And your book has been very helpful, just to tell you. I read it after I got a divorce.
Were you the money person in y'all's relationship, or was it your spouse?
He really was, honestly. I'm sort of embarrassed to say that.
Well, no, but I'm curious. I think that's good for the public to hear, is because you hear people, and so you had to not only lose this important part of your life, but you had to now go back and essentially
gain a new skill set.
New skill set to take on that. And you've done this all in a year. This is like, it's not like you ease into this. This is like, welcome to the deep end.
Yeah. Well, I have to give credit. My friend Susie is the one who recommended your book.
Okay. Oh, awesome.
I was reading Dave Ramsey.
Okay.
And I called her like, look, apparently I'm supposed to have like 3 jobs and never spend another dollar again. And she's like, no. You need to be reading this book. And so that was very helpful in kind of structuring how I was going to do things differently. And there's a lot in there that resonated with me. Like I love that you put generosity first. I think that's great. There was a lot in there that made sense to me. So I appreciate that. I think I was just trying to figure out this year, like what it looks like. I just really did not know. And now I feel like I know. So now I would like to think about it differently in terms of how to prioritize.
Anything that you wish that you could tell somebody if they were going through this?
I don't know if this is like answering your question, but that like it is worth it if you think that's the best path for you. Like you can figure it out. You know, I don't know that I fell into any traps. I think I got anxiety about losing, just not knowing. I just didn't like that. Yeah. I think I got very rigid for a while and probably stressed my kids out like with, we're not buying anything right now. But we did get to the other side of that. We figured out what we could do, and I think
Any credit card debt or anything? Did you stay away from it the whole way?
I stayed away. Yes.
Awesome.
Oh, thank you for saying that. Yes. No, I was scared I didn't want to use credit cards at all.
And where's that come from? Has you always just been a avoid credit card type person?
Well, you heard she was reading Dave before us.
Yes, exactly. Right, exactly. I mean, I was just worried that I would overspend.
Okay.
I literally charge on it and then pay from my bank account. So it's really to just get points, honestly. But so no, that has not been an issue, fortunately.
That's great.
Well, one of the things we want to show you is that, because as you sit here today, small changes, small adjustments can have pretty significant impacts. We said, all right, if you recognize, okay, what if I did want to give myself some flexibility earlier on, and I want to be true to and honor the financial order of operations, and I wanted to save more, where would I go? Well, once you get the emergency fund knocked out and you come through step 4, well, then you end up in step 5. And that's Roth IRAs and HSAs and building up your tax-free. We said, okay, well, what would it look like for Rachel if all she did was just max out a Roth IRA? She just said, hey, I'm going to start doing that, $7,000 a year. Even just deciding to do that now at age 45, rather than your investable assets only growing to be $884,000, just saving that additional $7,000 a year in the Roth now takes your portfolio by 65 to $1.1 million. That's not really the point I want to draw your attention to. What I want to draw your attention to is that at age 65, on the path that you're on, you'd be able to generate from your portfolio about $20,000 of income a year. By saving in a Roth, you see that you actually are able to generate about $20,000 a year of income from the portfolio 5 years earlier.
Yeah, that's great.
So if your goal is to buy back time and to create flexibility, the earlier you can begin making those decisions, the more impact those decisions can have over the long term.
Okay.
Because when we think about your dollars right now, what I want you to take away from today is, all right, there's probably an optimal way to use my dollars, and there's probably a less optimal way. And defining optimal is going to be up to you based on your goals.
Okay.
We already discussed, your sister, I could pay her $700, but instead I paid her $1,000, right? Well, there's $300 that could go towards a Roth IRA. Or there's $300 that could go towards philanthropic endeavors, if that was your desire. So I want to talk about another area where we think perhaps we could free up a little bit of capital. And you already know where we're going with this. You said you're prepaying your mortgage.
Yes.
Right? And you said, I just have this desire to be out of debt and not have that.
Right.
But when I asked you what your goals were, you said, I want to give. And then you said that was it. And then I kind of pulled out of you also want to be financially independent.
Sure.
And then there's probably this tertiary goal of wanting to be debt free.
Yes.
Right.
Right.
If you were thinking about priority, Is it more important for you today to be debt-free or financially independent?
I mean, I think financially independent.
Financially independent,
Yeah.
great. All right.
Are you leaning that you would do the Roth? Once you get your emergency fund fully funded, do you think you'll do this Roth?
Well, Megan Green asked me if I would follow your advice if you gave it to me, and I told her yes.
Right.
So I feel like I should say yes. I mean, I'm hearing you say it, and I'm thinking like maybe instead that I could do more philanthropic stuff, but I'm open to thinking about it differently.
Well, I think because you've been nibbling around the edges, you can still do both, I think. Now,
Okay.
I am all of the above. It's just, but I do want to challenge you as a parent also. Do you think your children will have this boom shakalaka opportunity you have with, I mean, because seriously, you put 6 in, the government puts in 9,
Right.
you get 15 for 6.
Right.
Even in my lifetime, we've seen a huge transition
Of
away from
course.
that. It seems like more and more of the world is pushing it more and more on your shoulders.
Totally.
But one of the places, if we were going to think about, hey, where should your money go? Not hearing you say paying off my house is my top priority, above philanthropy, above financial independence. And yet here you are, you're paying extra on your mortgage every
Right.
single month.
Right.
And remind me again what that mortgage rate was.
Yeah. 2.375.
She don't want to say it out loud.
I know, I'm
if,
like,
if we were in a
that's
live
amazing.
chat right now and asked for a poll, how many people would absolutely lose their mind if they had a
Yeah.
2.375%
Do you know how many young
mortgage?
people would be throwing tomatoes at the
Yeah,
screen?
right.
So we said, okay, well, let's not, obviously she understands this academically, right? Like I
Sure.
make 3.8 on my savings and I pay.
Right.
But I was like, well, let's show her like the real math.
Sure.
And so let's say that, okay, even if your goal were to be debt free, I don't even think you were attacking being debt free in the most
In the right
efficient
way,
manner.
sure.
I think you could do
Makes
it differently.
sense.
So if we think about your current mortgage amortization, if you were just making the minimum payments on your mortgage, you'd have it paid off by October 2047. And you said, that's not good enough. I don't
Right.
want this mortgage for that long.
Right.
I want to pay it off early. So you said, I'm going to pay an extra $200 every month on your mortgage?
Yeah, basically.
Basically $200 a month. Well, with doing that extra $200, or I'm sorry, $220, it's even more than I said, you are on track to pay it off by 2042. So 5 years earlier, that's going to save you $13,000 in interest, which is awesome, right?
Is it? That doesn't even sound like a lot for that many years. Years.
I'm doing a thing here.
Okay, go ahead. I'm
building.
sorry.
Did you
I'm
see it?
sorry.
Really? Really?
Okay.
That's where you're going?
I'll stay quiet.
So you can pay it off 5 years earlier. That
Right.
is a thing that you could be doing.
Divide 13 by 5.
Okay,
keep
Brian,
going.
we get it. So we said, hey, what if instead of paying that $220,000 on the mortgage, what if you set out with the desire to be debt free, but used a different vehicle than actually putting it on the mortgage? Because do you know how much interest every dollar you pay on your mortgage saves you? 2.37 cents, right? Like that's the way that math works.
Right. Okay.
If instead we took that $220 and we started investing it, and we said, let's just put this to work, and let's say we can earn 8%, right? You're young, relatively moderately aggressive risk tolerance, 8% rate of return. Do you realize that the intersection of your current mortgage and the dollars that you would be building in that little side account actually happened 2 years earlier
Interesting. I did not realize that.
than the
No,
path you are on right now?
I did not.
So even if your desire was to be debt-free, I would argue this is probably the optimal
Faster
way to
way.
get there because you're
Sure.
going to get there 2 years faster.
Well, it's not even telling you how much that amount. I mean, you can look at it because I can cross-reference even though I'm getting older. Is that 80 grand?
It's about $75,000.
Yeah, that's a decent amount of money just sitting in a bank account
Sure.
too. I mean, an investment account.
And so you're also going to be at this position in the year 2040 where you're going to have a $75,000 mortgage at 2.375%.
Sure.
And you're going to have $75,000 sitting in an investment account, and you're going to have some decisions to make. And you may decide, okay, this is great. I want to be able to help my kids. I want to be able to do philanthropy. I want to be able to pay off the mortgage. Or there is a scenario where you say, hey, I just want to let this money keep growing all the way out to retirement. By the time that you paid off your mortgage on its original schedule, by 2047, just that little $220 a month extra that you're paying in principal could turn into almost $160,000.
Yeah, that's a big difference.
And we thought, okay, she's not going to believe us, right? We have to like double down on this even more. We said, okay, well, what if you kept on your current trajectory, paying off that mortgage? Say, guys, I'm so disciplined. As soon as I pay off my mortgage, I'm going to start investing the whole amount. I'm going to start investing that whole amount. Well, even if you did that, by the time you got to the same 2047 year, you would have $89,000, almost $90,000. You're talking about like $70,000 less value from implementing what I'm going to call a suboptimal strategy.
Sure.
So if there were other goals that you had, like financial independence or even like philanthropy, I would argue that those goals could likely be better satisfied by rethinking how you're deploying your dollars.
That's super helpful. It's nice to see those numbers that way. That makes sense.
Because see, we're not going to convince her to do the Roth. I mean, we might, but if we tell her, hey, we just freed up $300 from your sister and $200 from work, that's an extra $500 a month. There's a lot of meaningful change and meaningful impact you can have with a number of organizations at $500 a month.
That's a big deal.
Or at $250 a month towards that goal and $250 a month towards financial independence goal.
Sure.
It doesn't have to be all.
That's where my heart was. I was like, why can't we do both?
I mean, I agree with
do
you.
$250 to each. That way you end up, and like I said, you get to model some good behavior for your kids, but then you get to also model being generous.
Right.
That's the win for me, is to do both.
All right, you ready for your homework?
Yes.
Homework item number 1, have a conversation with your sister.
Okay.
Hey, sis, I just want to understand. We had this original agreement. I adjusted it. Give me some feedback. Where are you? How does this? And she might say, getting 3% on my cash is pretty good. I could just kind of think of that as my emergency fund. It's paying me 3%. My high yield's paying me 3.8, not that far off. She may be okay with that interest rate.
Sure.
It may be something that she's comfortable with. Number 2, I'd really think about my mortgage strategy. I'd really think about, do I really want to be paying that $220 extra a month? Or do I want to do something else with it? Whether that be open up a taxable account and invest it, whether it be give it to causes that I believe in. I would revisit that. And then number 3, and I just said, I would decide if where your dollars are going actually align with what your goals are.
Yeah. That's a
If
great
my
question.
goal is X, am I deploying my dollars in such a way that it satisfies X? Or do I have the goal, but where my dollars are going is in conflict or in opposition to that? And I would try to realign those.
Sure.
And so it's an easy exercise. I sit down and I list out all my goals, and then I look at my budget for the last month, 2 months, 3 months, 6 months, and I say, where did my dollars go?
Right.
And did the dollars that I spent over here align with the things that I have on this side? If there's misalignment, I would consider, how do I realign this?
Okay. I think that's great. I'm going to do it.
I love it. She said she's going to do it. You've been wonderful. Thank you so much for coming
it was
to hang
really
out
fun.
with us.
I really appreciate it. Thank you.
By the way, Rachel, you because you'd let us know one of the charities you were super excited about was your local library there.
Yes.
That's where she got Millionaire Mission
Yes,
from.
right.
That's
We
where
are
she checked it out
sending
from.
you home with some extra copies so you can give them even more
Oh,
copies
okay,
to
great.
put into the
Perfect.
library.
They will love that. Thank you.
Are we going to sign those? You think we'll sign those copies?
Do libraries want
They want
signed
signed
copies?
copies?
Maybe. I don't know.
You know
We'll
what?
find out.
If your goal is to get people to keep them, so then you can
Yeah.
rack up
There you
library
go.
and late
That's
fees.
right.
Maybe
Maybe
it's
that's
an
the ticket.
alternative revenue source. Thank you, Rachel,
Yeah,
for coming
thank
on.
you both.
Bo, if somebody else wanted to come on Making a Millionaire, where do they need to go?
Yeah, if you want to be a guest on Making a Millionaire, you can go to moneyguy.com/apply. Or if you want to check out any of our free calculators or resources, go to moneyguy.com/resources.
Guys, as you could tell from hearing Rachel's story, sometimes life just happens. And it takes you back, not from step 8 where she started, but all the way back to step 1. Small incremental decisions can still have huge results. We love sharing this type of content. It's our hearts of educators. You too can make big changes in your life. I'm your host, Brian, Mr. Bo, and for Rachel, Money Guy team, out.